Welcome back, everybody. Meta and Microsoft reported earnings yesterday, and well, the market liked it a lot.
I like you a lot.
With Meta up 11.5% in the pre-market and Microsoft up over 9%. And to me, it made one thing very obvious, which we're going to get to at the end. But first, let's take a look at what they reported. All right, so for Q2 2025, Meta basically reported 22% revenue growth compared to only 12% cost and expense growth, which means that their operating margin improved, which it did. And you see income from operations up 38%, which is just awesome. If we go down to net income, it's up 36%, diluted earnings per share up 38%. I mean, these are amazing numbers for a company of this size. And actually, if we take a look at the previous quarter, you can see that they're basically accelerating on every number here, even though these were pretty close to the same. But they're seeing acceleration almost across the board, which is pretty good. And obviously each quarter is different in their seasonality and all that type of stuff, but still the numbers are great. And if we just take a look at some of the other items, you see family daily active people, which is what they use to measure kind of the number of people on their platforms, is 3.48 billion on average for June, an increase of 6% year over year, which look, at 3.48 billion in terms of like the world's population, basically, or the internet connected population, that is pretty awesome growth considering how much reach they already have. And if we take a look at ad impressions, they're up double digits at over 11%, and average price per ad up a respectable 9% year over year. And if we take a look at their earnings slides, we can see a little bit more of a breakdown for those, if I can find it here. So you can see ad impressions delivered year over year percent change. So your 11% is right here. And if you see the breakdown by geographic region, US and Canada is 9%. That's pretty respectable, being that it's one of the highest ones, because US and Canada also tend to be where they're the most valuable in terms of average revenue per user. So having good growth there is great. Asia Pacific growth has been really good, but as we'll see, average price per ad growth there isn't as good as the other areas. But if we go down to average price per ad year over year percent change, you can see that again, US and Canada, 11% growth in terms of average price per ad is pretty respectable. And then it's high everywhere else except Asia Pacific. So you have this thing where the amount of ad impressions are growing a lot in Asia Pacific, but maybe the price per ad is staying relatively flat. Whereas in other places like US and Canada, you have respectable growth and you have pretty good price per ad growth as well. And then if we just take a look at their commentary and outlook going forward, they do expect full year 2025 total expenses to be up, which would be about 20 to 24% growth year over year. So they do expect those expenses to kind of ramp up a little bit as the year goes on. And then if we take a look at CapEx, because I know that's something people will be talking about a lot, they basically narrowed their range for the year just by a bit. I mean, it's basically within the same range it was before, but they're saying that it's up approximately 30 billion year over year at the midpoint. And while the infrastructure planning process remains highly dynamic, we currently expect another year of similarly significant capital expenditure dollar growth in 2026, which I'm taking to mean they expect another $30 billion of growth, which would take them about at $100 billion of CapEx for 2026. So, this is just a crazy story that has gone on. And if you go back and watch my previous earnings, videos about these big tech companies, this has been a common theme. We're spending a lot of CapEx, we're buying GPUs, we're building data centers, we're doing all the stuff related to AI spend, and we're continuing to ramp that up. So while everyone has been saying that trend's going to die, it's a bubble, it's going to pop, no one's going to, want NVIDIA chips anymore, they're all telling us the opposite. So, I mean, overall, this is just a unbelievable quarter for Meta. They absolutely crushed it. And one of the things that I really liked is that they released a personal super intelligence kind of post here. And Mark Zuckerberg had a couple of videos and stuff where he was talking about their vision for AI and personal super intelligence. And there's a lot of good stuff here if you're interested in reading it. But one thing that I thought was really good is he says, Meta's vision is to bring personal super intelligence to everyone. We believe in putting this power in people's hands to direct it towards what they value in their own lives. And to me, this is where Meta has a really unique advantage. I mean, you just saw they have 3.48 billion people that are active on their platforms. That is just unbelievable scale, unbelievable distribution. And the fact that they're kind of leaning into this personal super intelligence kind of idea is a really good one, because what it does, number one, is it kind of humanizes AI for, a lot of people who are hesitant or maybe against it because they think it's all about robots taking their jobs and, all this other stuff. Being able to frame it as, look, our goal is to take AI and allow it to be this kind of personal super intelligence that you get to leverage in your own life to make your life better, whether that's, doing the things that you want to do in terms of creating something or building something, or he even said like being a better friend, whatever those type of things mean. I think it's a really interesting twist on how to bring AI to the masses. And I'm curious to see kind of how it plays out. Obviously, they have a lot of work to do to make it valuable, to make it good. I would say in some ways they're kind of behind in terms of what Meta AI is. I talked about that in one of my previous videos. But I think it's a great vision. And I think it's something that they're uniquely positioned to be able to deliver on that their competitors really aren't. And in general, it seems like the market kind of agrees with Meta, again, being up big in the pre-market. Now, overall for me, I like what Meta's doing. I like what Zuck's doing, even though I know he's an easy target to kind of criticize and people talking about all the money he's spending for AI talent. But I look at it as simply a founder who is using the resources available to him to get the best talent he possibly can to be able to work on the most important thing of probably the last decade. So to me, that's the absolute right approach for them, because at the end of the day, if they don't win or they don't do extremely well, then it's going to hurt their business by a lot. But add on to that what they're doing with the Ray-Ban smart glasses, which I've been a big fan of for a long time. And I love that they're talking about this in a slightly different way, talking about bringing this personal super intelligence into your life in a way where it's a force for good. So obviously, we'll see what happens, but blowout quarter for Meta, they crushed it, and yeah. All right, so now let's take a look at Microsoft. Now, Microsoft reported revenues up 18%, net income was up 24%, and obviously earnings per share also up 24%. But what they say here is that cloud and AI is the driving force of business transformation across every industry and sector. Now, again, common theme. These things just keep coming up. They keep getting stronger with their words. Their, revenue and business results are accelerating. I mean, this is happening across most of these companies. And if we scroll down just a little bit, we see server products and cloud services revenue increased 27%, driven by Azure and other cloud services revenue growth of 39%. So Azure being up 39% is just insane. That's just unbelievable growth, and we're going to look at a slide here to see how it's been trending. As you can see, Microsoft Cloud revenue growth has been on a really good trajectory. I mean, over 20%, 22, 21, and then now, again, 20 and then 27. I mean, so we're talking about an acceleration of cloud growth in a segment that's arguably their most important. And if we take a look at the Azure growth trend, you can see 34, 33, 31. So it was kind of like decelerating revenue, even though, it's over 30%. So it's still really good. But now it's 33 and then now 39%. I mean, just an amazing performance from the Azure business segment for Microsoft. And I know that's really what drove the market's reaction, I'm sure. So again, when you look at Microsoft's quarter, I mean, they just absolutely crushed it, especially for their size. And people always ask me like why I don't own Microsoft in my portfolio. It's probably the one stock that comes up the most in the comments. And I don't really have a good reason for why I don't own it. Like, I'm a huge fan of Satya Nadella. I think he's a great CEO. But part of the challenge that I have with Microsoft personally is I don't think I've actually used or liked a Microsoft product in like the past 5 years, like since I left my corporate career, right? I don't use Windows because I only buy Macs. I don't use Office because I use Google Workspace. I don't use Azure. I mean, my stuff runs on Cloudflare. I've used GCP. I've dabbled in AWS, basically everything except Azure, and I don't use LinkedIn because I just can't use LinkedIn. It's just not for me. And look, obviously I used all their products when I was in my corporate career, and they have enterprise locked down, and that's why they're doing so well. And of course, there's no rule that we should only invest in companies that we actually use or like. It's just, for me, it just makes them slightly less interesting than all of their peers, which I do use, and I have a lot of them in my portfolio already. But by all means, don't ignore Microsoft just because I have. Clearly, they're a beast and they're crushing it. All right, so what does this actually mean? Now, to me, Meta and Microsoft's earnings prove one very critical thing, and that's AI related spend and transformation is still accelerating. Like, it's not slowing down, it's accelerating, and it has a long tail to it. So businesses are not only seeing the demand, but they're starting to get the benefit on their actual bottom line, and we're seeing it in the earnings reports. And this is the crazy part. If you guys remember, back when I added NVIDIA back in March of 2024, there were so many comments about how I FOMO'd, I was just chasing returns, how NVIDIA was at the top. But to me, when I dug in and did my analysis, it just felt like we were still at the beginning of this trend. And 18 months later, not only has spend continued to ramp up, but the businesses who have been investing are accelerating their revenues and doubling down even more. And people keep saying this is some kind of bubble that's going to pop, but I think I've been pretty consistent in saying that we're at the beginning of this technological shift that still has a ways to go. And if you take a look at my portfolio and the changes that I've made to it over the past 18 months, I mean, just about every company in my portfolio now is attached to the AI or cloud trend. I mean, obviously, NVIDIA, Amazon, Meta, TSM, Cloudflare. Now, you could argue Coinbase and Visa are more about fintech and payments and that type of thing, but Snowflake, Alphabet, Palantir down the line. So look, all of them, right? That's by design. It's not coincidence. I'm a firm believer in that trend, and I'm putting my money where my mouth is, plain and simple. I truly do believe that the more we stop worrying about what other people think about the decisions we make with our own money, the better we can be at investing. Because people are going to criticize you no matter what. Like in 2023, when I was trailing the market, all the comments were about, oh, why are you even wasting your time? You're never going to beat the market. And now that I'm crushing the market, it's, oh, you're just chasing returns and FOMO, and all you talk about secular trends or whatever people say. And a great example of this is back in September 2024, I did a video saying that I thought Meta was the best bargain in big tech over Google or Amazon, even though it was at all-time highs, around $5.50 a share at that time. And some of the comments were like, well, it can't be the best bargain because it's at all-time highs. And this is kind of what we've been conditioned to think. Something at all-time highs can't possibly be cheap. But close to a year later, you can see that Meta has outperformed all of its big tech peers, and by quite a bit, especially when you consider that this is just from yesterday, so it doesn't actually include the 11 to 12% run up that it's having today. So by the end of today, this is going to be an even bigger number and outperforming by even more. So I know I sound like a broken record, but you really do have to learn how to ignore the noise from everyone else and just concentrate on your own process and your own ideas. It doesn't mean that they're always going to work, but at a minimum, you'll learn something you can take with you going forward, and at least it's based on your own personal thoughts and not those of someone else. Now, if you're a Meta or Microsoft shareholder, congrats, you're probably smiling pretty big today. And if you wanted to see why I thought Meta was the best bargain in big tech last year, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom. So keep building and stacking wins, and I'll see you on the next one. Peace.